Welcome to today's market report.
Global stocks fell on Tuesday while the yield on two-year US Treasury notes rose to almost a 15-year high as investors prepared for the likelihood of another 75 basis point interest rate hike from the Federal Reserve. The Fed is set to announce its decision on Wednesday at the end of a two-day policy meeting. Rate futures traders are pricing in an 81% chance of a 75 basis point hike and a 19% probability of 100 basis points of tightening. Britain, Norway, Switzerland and Japan also have monetary policy meetings this week. Earlier on Tuesday, Sweden's central bank raised interest rates by a larger than expected full percentage point to 1.75% and warned of more to come over the next 6 months. The US two-year note, which is highly sensitive to shifts in monetary policy expectations, earlier on Tuesday hit 3.992%. The Fed and other banks are trying to take an aggressive stance to tackle inflation, but investors have also worried about the impact of higher rates on global economy. On Wall Street, investors were cautious of making new bets. Investors are just selling the Fed. All of the bad that was ignored. We are getting all of that back. People are pessimistic. Shares of Ford Motor sank after the automaker said inflation-related supply costs will run about $1 billion higher than expected in current quarter. The Dow fell 1.01%, the S&P lost 1.13%, and the Nasdaq dropped 0.95%. The Pan-European Stock 600 index lost 1.06%, and MSCI's gauge of stocks across the globe shared 0.85%. The dollar index was on track for its fifth weekly gain in 6 and was up 0.5% at 110.13. It hit 110.79 this month for the first time since June 2002. GBP/USD oscillated around the 114.10 mark, whilst the euro-dollar pair was unable to retain parity and settled around 0.9970. Dollar CAD trades at 133.60. Dollar yen was at 143.60.
This is today's market news. Thanks for listening. We'll see you next time.